Lerner, technically, are we in the second leg of a bull market?
Well, first, great to be with you for this stellar group this morning. To answer your question, I mean, I do think you have to give the weight of the evidence that the trend is still intact for the bull market. But our view, and really our call coming into August, was that we were going to consolidate, right? Jonathan mentioned earlier, why this market has done so well. The economy surprised to the upside, earnings surprised to the upside, inflation surprised to the upside. But what you've seen more recently is that during the earnings season, instead of going up on positive earnings, stocks actually went down. We had a good inflation print last week, and the markets really didn't do much on that. So I think we're in this consolidation zone. Expectations have been reset high, and I think we just need to move sideways for a bit.
Keith, you and I learned point and figure charts from the great Louise Yamada. She would talk about distribution. Isn't boredom, isn't range bound, isn't distribution healthy to have a continued up market?
I think part of that is healthy. I mean, what we saw even coming after July is that we've seen sentiment reset higher and expectations reset higher. So what have we seen in the last few weeks here? We've seen the market kind of pull back modestly, and we're seeing sentiment get more cautious already. So I think that's ultimately a positive sign. And I don't think the individual investor ever got to euphoria. If you look at the fund flows from the ICI data for this year, we've seen equity flows relatively flat. We've actually seen $100 billion go into the fixed income side. So, and the last thing, Tom, to your point, it's normally 2 steps forward, 1 step back. I think at minimum we have at least a baby step back and some more choppy action here near term.